Welcome back. I'm your host, Darnell Jackson. In this crypto report, we're going to be talking about the Federal Reserve and market manipulation. But first, make sure you subscribe to your favorite channel on YouTube, Darnell Jackson Crypto. Shout out to all the subscribers. Okay, now, if you haven't, make sure you check out the video I did a long time back talking about Jerome Powell. All right, you have to pay attention to the source of the money, and the source of the money is always going to be the Federal Reserve. They're creating the actual currency. So make sure you check out this report. Here it is. Fed Chair Jerome Powell says you won't need cryptocurrency. All right, so I want you to follow these stories so you can really get a grasp of understanding where these officials are coming from. One thing they can't do is change what they said when they said it. So you got to kind of follow the story so you can clearly understand what these people are up to. All right. So start with that report that was 2 months ago. So we're going to jump forward to today and get an update on what is going on with the Fed. I'm going to drudgereport.com. And this is the big news on the homepage of Drudge Report. So it's no longer a conspiracy theory. It is just public, out in the open. The feds are just out here creating money, buying stocks. So what has long been discussed openly as something that everyone knew the Fed was doing, which was creating money and then handing it over to their friends so that their companies could look super successful. What we all thought was happening, well, now it's being admitted. So I want to get into this so that you can understand a little bit more about what's happening, who are the key players, and what the next steps are you should expect will be. Two things I'm going to focus on in this report. There's two players. I'm going to focus on Robert Kaplan. Robert Kaplan, that's a terrible scribble. Let's draw a better line than that. Robert Kaplan, who's from Dallas, and I'm going to be talking about Boston Fed President Eric Rosengren. We're going to be just talking about some of the things these guys are saying and looking at the things these guys are doing so you can understand what's happening with the money markets, which control cryptocurrency. All right. Speaking of crypto right now, due to the confusion that these guys are kicking, right now Bitcoin's down. Bitcoin's down and the market's down. And the stories that we're reading is, the Fed, they're buying stocks of their friends' companies. It's no big deal. And so now Bitcoin's been down in the past week it's down to 3.5%. It's down 15% in the last month, down to 41,000 right now. So when we look at the big picture, it looks like it's creating this second little peak here. But Bitcoin doesn't move on its own. It has the Federal Reserve breathing down its neck. So let's get into the points that I wanted to make here. The first thing I want you to realize is the size of the stock market. Here's an article from Sibelius Research that talks about the total market value of the U.S. stock market. Okay. The total market capitalization of the U.S. stock market is currently $46,994,123 million. So it's actually a million, which is a trillion. All right, just so you can get updated on numbers, a million is a trillion. So it's $46 million. $46 million. So it's $46 trillion is where we are. And here is a chart This is a table that shows how fast this is. Go full screen so you can see this. And this shows you how quickly the economy, or the stock market, has grown in a short amount of time. There is a stat here that says between January 2010 and December of 2020, the market cap of public U.S. corporations increased by 170% in 10 years. The market cap almost doubled twice. And so this is driven by the Fed printing money out of thin air. So I want to just document this for you. So now we're at 46 trillion. By comparison, the entire cryptocurrency market is only 1.8 trillion. I'm just here looking at coin market cap. So Bitcoin is most of that. But Bitcoin, Ethereum, all of your favorite coins, everything totaled up to 1.8 trillion. But the stocks, let's just say for easy math, they're at 50 trillion. All right? So right off the bat, just understand the two numbers you're dealing with. Stock market, 50 trillion. Crypto is working to get back to around 2 trillion. Okay? So that gives you an idea of what's happening with what the Fed is doing. So let's jump into one of the individuals here. Robert Kaplan. He is the Dallas Fed. What has he been saying about Bitcoin? When I saw this report, the first thing I thought of was, okay, these guys got caught insider trading stocks. Number one, of course, they should be facing some charges. But of course, we know everyone doesn't get charged with crimes. But we can learn from his comments so we can get an idea of who these guys really are. So what has Robert Kaplan been talking about? Okay. So here is an article right here from earlier this year in April. And here is Dallas Fed Kaplan bad mouthing Bitcoin. He says that Bitcoin is a store of value and it's not ready for wider adoption as a medium of exchange, right? Now, Kaplan used to be at where? Goldman Sachs. And where else? Harvard. Okay? So these are the guys, these are the top-down thinking gang. The guys that they're going to make all the decisions for you in your life. Okay? But let's see what he says. Right now, it's clear it's a store of value. Kaplan said of the largest cryptocurrency, it obviously moves a lot in value, which could keep it from spreading too far as a medium of exchange and wide adoption. But that can change. Well, he said one thing that's right. So here are some of his comments. All right, and this is from Kaplan. So I want to jump over to another report, and this is from the other Fed chair who got caught up in this scandal, and that is Eric Rosengren, the president of the Federal Reserve Bank of Boston, sitting up there with Jerome P is in the house. And so let's look at his comments. This was in February. The president of the Federal Reserve Bank of Boston says he expects a winning streak for the digital currency Bitcoin to eventually come to an end. So see, they're going to be negative. They're going to be negative. Personally, I've been surprised that Bitcoin has continued to flourish, Eric Rosengren, the head of the regional central bank, said in an interview with the New York Times on Friday. The digital currency is trading at more than $50,000 a coin, and on Friday surged to a market value of more than $1 trillion. All right. So you can just kind of get a feeling for where these guys are when it comes to cryptocurrency. And let's jump to another report here. This is talking about why the Fed is getting worried about the most boring thing in crypto. So I'm going to play a video also for you. And this is Eric Rosengren talking about he's worried that the stable coin market currently is pretty much unregulated. As it grows and becomes a more important sector of our economy, that we need to take seriously what happens if people run from these types of instruments very quickly. Just like the money market funds caused a bad disruption in credit markets, I think a future financial stability problem could be occurring if we don't start thinking carefully about what happens to things like stable coins next time we have a market difficulty. Okay. Boston Fed President Eric Rosengren pointed out that stablecoins have seen a parabolic rise in assets under management relative to prime money market funds, which have dwindled since the 2008 financial crisis. So you can see on this chart here, this is stablecoin market cap versus prime market funds. So people are going into stablecoins and not prime market funds. Okay. And they're talking about panic and investors. Okay. So, and now I want to talk a little bit more about, I want to play this video and where the Boston Fed is going to be talking about inflation. So I'm going to jump ahead to, I think it's right about 6 minutes. I'll play this video right here for you. Okay, check this out. This is
that we should include as we think about the substantial further progress.
And then I want to shift lastly here to stablecoins. You were talking about Tether in your presentation actually just about an hour ago. It's been taking a lot of air out of some of these prime money market funds. But, you pointed out that Tether and a lot of these other stablecoins are deep in things like commercial paper and even corporate bonds in some cases. But my question is that the Fed did step in during the midst of this pandemic to backstop the corporate debt market and commercial paper markets. So I guess isn't the financial stability risk of those stablecoins like Tether only as big of a risk?
Hold on, just want to document there for a second. He said that the Fed stepped in to back commercial paper market. Very important. Let me back that up a little bit because I know we've been talking about Tether and just realized that Tether claimed that it was now backed by commercial paper. Notice how the interviewer asked the Fed chair president, Eric Rosengren, about how the commercial paper is being backed by the Fed. Check this out.
Sector. I think that is one of many considerations that we should include Tether as we think about the substantial further progress.
Think about Tether. Remember what Tether
And then
said.
I want to shift lastly here to stablecoins. You were talking about Tether in your presentation actually just about an hour ago. It's been taking a lot of air out of some of these prime money market funds. But you pointed out that Tether and a lot of these other stablecoins are deep in things like commercial paper and even corporate bonds in some cases. But my question is that the Fed did step in during the midst of this pandemic to backstop the corporate debt market and commercial paper markets. So I guess isn't the financial stability risk of those stablecoins like Tether only as big of a risk as the Fed will allow, given its historical role as a backstopper?
Great question. What he's basically asking him is, hey, isn't the Fed backing Tether? Because Tether's backed by commercial paper that the Fed backs. Excellent question. Let's hear what Boston Fed Eric Rosengren says.
The reason I talked about Tether and stable coins is if you look at their portfolio, it basically looks like a portfolio of a prime money market fund, but maybe riskier. We actually had a stable coin that ran into financial difficulties last week. Tether, as you highlighted, has a number of assets that during the pandemic, the spread got quite wide on those assets. The Fed intervened in order to make sure that short-term credit markets continued to operate. And the reason we should be a bit concerned about stablecoin is that it's growing very rapidly. So there's exponential growth in stablecoin. The prime money market funds have been slowly going down as people have looked for a less risky way to hold their transactions accounts, and many of them have moved to government money market funds. But I do think we need to think more broadly about what could disrupt short-term credit markets over time. And certainly stable coins are one element. I think there are other investment products as well that have the characteristic that if we have a big shock in financial markets, people tend to move out of those areas quite quickly. And I think that's an area of financial stability we need to pay more attention to.
I mean, I guess as a follow-up, though, I guess my point being that if the Fed is going to backstop those markets, if they do experience stress, then wouldn't there not be as big of a financial stability risk from those types of products?
Great follow-up question. He's saying, look, at the end of the day, if you're going to back these assets that back the stable coins, then what's the problem? We shouldn't worry about the stablecoin risk because it's basically backed by the Fed.
So my own view is that we should be changing the regulatory environment so that we don't have to intervene in the market.
So that you don't have to.
Every 10 years. And while we ran the MMLF and the AMLF to support short-term credit markets and the money market funds in the last two recessions out of the Boston Fed, I would hope that we would change the regulations so that the next time we have a crisis, we don't have to do it again. And I guess the broader point is that it's not just money market funds that we have to be worried about. We have to be worried about things that destabilize short-term credit markets. That takes a more holistic approach to thinking about financial market regulation. I do worry that the stablecoin market that is currently pretty much unregulated, as it grows and becomes a more important sector of our economy, that we need to take seriously what happens if people run from these type of instruments very quickly. And just like the money market funds caused a bad disruption in credit markets, I think a future financial stability problem could be occurring if we don't start thinking carefully about what happens to things like stable coins next time we have a bad market difficulty.
Did call out.
So he says you need to be concerned about what happens to things like stable coins. So use your experience and perception and post in the comments what you believe this means. If he's concerned about people flighting from stable coins, and we know that stable coins are backed by assets that the Fed purchases, we basically can understand that they could back Tether if they wanted to. So the question then becomes, do they want to?
Home prices as one possible area. Wondering if you could elaborate a little bit more about the rising home prices that you're buying about 40 billion.
All right, now he's talking about home prices. So I want to thank you right now for posting in the comments your perspectives. I am looking at this, and my attitude is that ultimately, when you look at the size of the markets, you look at the performance that you're getting out of crypto, you're not going to sit around and hide from all of this money coming out of the stock market. When you look at Bitcoin having what really is a bad year for Bitcoin standards, but it's performing at 288% return, and the wider crypto markets at 400%. When you see so many sectors of the mainstream economy down, they are going to be coming after these gains like a zombie. There won't be anything that you can do to stop investors from chasing after gains like this when they're seeing their conventional investments go red. At this point in time, I want to thank you for liking this video. If you didn't like this video, make sure you check out all my other videos, including the Jerome Powell video. You got to go find that one. And check out all my other videos. Watch like 10 or 15 videos, man. And I'm sure you'll like at least one of those. But if you don't, share every video you watched with someone who will. Until tomorrow, peace.